Good morning. Welcome to this discussion on the Jobkeeper wage subsidy. It's the second edition that we have with regards to our Disrupt Pandemic edition, proudly brought to you by Razu. Razu is a healthcare business lender and is starting up this community platform of its advisors, of which I run MediBusiness. So my name is Grace Lai. I'm a medical doctor and a co-founder of MediBusiness, which is a strategy and operations consulting firm that operates here in Australia. We're pleased to be part of this community as we can see that this would add a lot of value to our healthcare, our medical and dental clients in this space. I just wanted to take a moment to acknowledge that today is Anzac Day, and we remember those who have served our country and paid the ultimate sacrifice. I'd like to take this opportunity now to introduce you to John Domante. John is the Managing Director at Electo Finance. He started his finance journey as a mortgage broker in 2003 before he gained experience as an asset finance provider, banker, and then a relationship manager for Medfin, a specialist division of NAB, managing a portfolio of medical and allied health professionals. He has an extensive knowledge in mortgage management, commercial and construction finance and asset finance, and is a specialist medical finance consultant, which will lend itself very nicely to this discussion here. John's focus is on providing the highest possible levels of service, as well as adding value to a client's business by providing insights into the industry's best practices, which we will share here today and throughout the series, as well as utilising the extensive network of professionals he's built across his years of serving the industry and has the privilege of working with. Welcome, John.
Thanks, Grace. And I have the privilege of introducing one of our partners within Electo, Prabha Ganeshan. He's a CPA, financial planner, and also an SMSF specialist advisor. He has 2 decades of experience as an accountant, and within his group, Aspire Partners, they provide taxation advisory and SMSF advice across medical and construction, but they also count Hungry Jack's and Yellow Brick Road as companies that they've also worked with. Over the last 10 years, Prabha's experience has been as a medical accountant, actively assisting medical and dental professionals. I've had the pleasure of being able to work with Prabha, and we have joint clients, and I've personally seen some of those clients start from a single sole practitioner to multiple sites and having tens of doctors working for them, for example, and also increasing their general wealth and financial savviness. So welcome, Prabha, and thanks for joining us today.
Thank you, John, for the warm introduction. As John mentioned, my name is Prabha from Aspire Partners. So I'm here to walk you through on mainly the stimulus package, but at the same time, just discuss on how the cash flow can be managed and what to expect in the next 6 months or so. So I wish to just put a general disclaimer. So whatever we discuss here is general in nature, and you should seek professional advice if you need specific advice from your personal advisor or from your accountant, whoever you work with. Starting on the impact of the virus, which is why we are all here. The unfortunate thing is the spread has not been contained as we all know, but fortunately, Australia is making a really good progress in it, and which I feel is going to come when we come out of this. We are going to be in the front lead, and hopefully for the economy, it has to be a good thing. The real issue is, as we all know, the longevity of the virus, and until that is contained, nobody knows how long the whole pandemic is going to last. Our industry, the healthcare industry, is definitely going to be impacted, and I'm actually, in a way, looking forward to seeing things done differently, especially with the use of technology. We have seen telehealth being one of the things that has made real progress, and there's a lot of talks about that being there for the long run. So I also ask Grace to sort of come in and just maybe talk about the impact.
Thanks, Prabha. Yeah, so I think there's a lot of controversy. I don't think that we have seen the end of this yet, as you've alluded to, although we are, as a nation, probably ahead of different areas. For the dentists on this call listening to the replay, we were thrown a spanner in the works. So I do some strategy and operations work with a dental network, and we were thrown a very big spanner in our works with the change to level 2, although I guess given the fact that we had very low new case announcements, it probably wasn't that surprising. But most of the research that I've seen overseas and most of the trends that we believe and where we're preparing for is what I would call a double sigmoid. And I don't know if that's hit my LinkedIn feed yet in terms of our blog publishing. But if you look at biological curves, there's always a flattening of the curve, and then there's a second spike, which is not anything different. But the problem about the second wave is that the first wave has taken out your coping mechanisms. So especially with Jobkeeper coming through, as we're going to discuss, just to get onto Jobkeeper, just in order to fund Jobkeeper, has taken out a number of people's liquidity. A number of people are now extremely stretched thin in terms of their financing. So the impact of the virus is absolutely, as you said, far-ranging. It's going to change the way that we've done business. But I think this first wave has actually taken out most of people's coping mechanisms, and they're not even thinking about what it would look like for the second wave. Back over to you.
Thank you, Grace. So let's talk about the cash flow management, which from a financial front, that might be the thing that might be stressing most of us. One thing I ask all my clients to do is just perhaps make sure that for your business and for yourself, you have a helicopter view of what you're looking at. As opposed to trying to see, okay, can I get this? Can I get that? Or can I, be able to work for 5 days, 2 days? So when I say helicopter view, is the way we've worked with our clients is, for example, if you take a dental practice, which we know that has been hardly impacted by the whole pandemic, I sit down with the dental practitioner and work out, okay, for the next 6 months, which is what we have a contingency plan for, how much money that the practice will need in terms of fixed overheads, which includes making sure the staff are kept intact, rent is paid, and all the outgoings are paid. Sometimes the subleases may not be recovered, so we need to factor in for that as well. Work out how much money that's needed for the next 6 months. Assume the clinics is closed for 6 months. And then we go back and calculate and see how much money we can get through different stimulus, grants, and other means. And then work out what the deficiency is. If there is a deficiency, then you look at alternative options to seek for funding. So it's a step-by-step process, and you do need to work through that and make sure that you obviously got an understanding of what you're looking at. Then it'll be a lot less stressful as you drive through the pandemic, because of course you, as a technician as well, you want to be focusing on your work rather than worrying about finances all the time. So John's put together this little slide for us just to highlight all the different the stimulus or the incentives that we have available. John, would you like to quickly run through this?
Yeah, sure. So last week we briefly touched on this, and then I guess today is a more of a focus on one of those, which is the Jobkeeper payments. But that infographic is more just an overview of what's available from a federal government level, from state government. So each state has got their own little package or relief for businesses. But then also don't neglect your local council or local government packages. There are some grants that are available through local councils. The big part as well is the Australian Tax Office and their assistance, and then what you can do there. There's also the one I guess I will speak on a little bit more later as well, is a bank and financial institution assistance and what that looks like. Go back also to your landlord for potential rent relief. Each state has been given or sort of a passing legislation regarding what that looks like as well. So make sure you talk to someone, your lawyer or a trusted advisor, about how that looks like. And then the main part is, the cash flow analysis and budgeting, which Prabha already mentioned as well. Once you sort of manage those cash flow, really the main thing as well is to innovate and how to. So that the top 7 is how you get an initial cash, or the top 6 at least is how you get initial cash. The 8th bit is also to, while you're in this period of pause for most businesses, how you can innovate and come out the other side probably better than what you were before. So over to you, Prabha, but if you could let us know about how that all sort of fits in within the general plan.
Sure. Just before we move on, I'd like to bring Grace into this conversation as well. Now, Grace, in terms of, there are a lot of practitioners who's always been really busy, and perhaps whenever, in terms of making technological changes, they're all concerned about, the time factor before. I'm assuming they're all going to have enough time, and probably something also to consider.
Oh, absolutely. Like, I think that if you haven't been using these last 4 weeks to actually reconsider how your business was always intended to be, because we all know what it's like running a business. You start with the best of intentions and you find your customers basically guide you as to your business, and suddenly about 10 years later, you're like, how did I get here again? So absolutely, there's an intentionality that needs to become part of this, and technology can absolutely help, because I think if you can find what it is that you were trying to do, technology can be the great augmenter. So we've, no better place have we seen this with public health clinics, where the hospitals have shut down their outpatients, and now there's this process put in place with technology and through a series of phone calls and video chats, where instead of bringing patients in, where all they're doing is just handing them an MRI form, or they're telling them the next step of the process, all of that is actually conducted over the phone, or with reviews or reviews of results, etc. Conducted with face-to-face, inverted commas, face-to-face meetings. And in fact, if you look at the GP sector, and John and I will allude to this next week, there's a lot of technology that's been brought in there where it's seen a great deal of innovation come through very quickly. That was always there. It just wasn't time to adopt it. And now this is the push point that has actually caused people to adopt it.
Yeah,
one of those examples for GPs and for that are listening in, just as a quick one, if you want to implement quickly, is if you look at virtual assistants and how quickly they're sort of helping manage or triage possible COVID patients, especially now given that the government mandate is to, if you even have a slight sort of mild indication of it, to get tested now. So look at something like Hyro, HYRO.ai. They provide free sort of tools to be able to implement that. So just one of them, but if it's something you can implement quickly between now and next week's longer technology speak, then definitely look into it.
Okay.
And also, it is a great time, whether you may not have the funding at the present time, but it's a great opportunity for the practitioners to start looking at working on the business, in the sense, have a lot, sort of laying out long-term plans, what sort of technology that you're going to use, and how your business is going to look like in the next 5 to 10 years. And put in place systems and processes which probably are the ideal time, because when things get back to normal, that time is often very difficult to find.
Anyone that's on the call that needs help with that, we're very happy to sit down with you at MediBusiness to have a chat about what your strategy and your plans going forward might look like. Absolutely.
A 15-minute phone call probably could make a big difference as well. All right, so we'll just talk about the stimulus package today. I will run through mainly the cash flow boost, which I'm I'm pretty sure everyone's aware of, and the Jobkeeper payments. Just the eligibility criteria, and in the end, we'll talk about what other options we have in terms of funding and so forth. So the key measures that has been come with the introduction of the stimulus package is the intention is to support households, including casual sole traders, retirees, and those on income support. So there are some Centrelink payments that are being introduced as well. Our focus, which is also the main assistance for businesses to keep people in the job. So I just ask everyone to highlight, just keep in mind the focus for the government is for you to keep people in the job, and that's what they're looking for. And also regulatory protection and financial support for businesses to stay in business, so that they would want you to continue beyond that 6-month period. So what are the stimulus access we have at present? Cash flow boost. If you haven't done your quarterly GST or your monthly GST for the March period, obviously you haven't seen it, but if you have already completed, you probably have seen your first lot of payment had come through. So every business that's with a turnover less than $50 million, which I'm assuming that most of us are, will be eligible for it. So it's there's no forms, nothing you need to know. Pretty much lodge your activity statement as you normally do, and those payments will be paid to your activity account as a credit. Jobkeeper subsidy is the key one, which is quite complicated, and we'll talk more about that. Early access to your superannuation payment in terms of cash flow is there. A lot of relief by the ATO as well. We'll go through bank funding. There are some state government grants and rent reliefs, and there are also, we need to look at other benefits that there might be specific to your business, like, for example, increase in incentive payments and payments, one-off payments by Eastern Health and so forth. Right. So the cash flow boost is minimum $10,000, and any business can be paid up to $100,000. So this is actually physical cash. It's not a reduction in tax or anything like that, and it is tax-free. The key requirement is that you must have employees. It could be yourself as an employee, but your business must have someone who has been on the payroll. However, just be mindful if you've never been paid a salary out of your company. So let's say you're a contractor dentist and you run your business through your own company or your trust. If you've never paid yourself a salary, you won't be eligible for the cash boost because you cannot do things retrospectively. And the ATO has warned that this is against the integrity rules. As I said, the boost is available for businesses under 50 million. May be applicable to contractor doctors who were under the structure, a business structure, and has been paid prompt salaries and wages, and paid super and work cover, etc. You must have been registered for PAYG tax on or before 12th of March 2020. Just also remember, this is actually a credit to your integrated account, not a cash payment. In other words, if you had ATO debt, that ATO debt comes off before that cash, the balance of the cash is paid to you. Also, as I indicated, integrity measures. You cannot increase your withholding just for the quarter. You cannot pay yourself from being paid a distribution or dividend previously to salaries and wages, and you cannot change the structure retrospectively. So you can't do anything, like you can't go and change from being a sole trader to a company or a trust all of a sudden. So none of that is allowed. So I just want to quickly run through an illustration. Let's say Paul, who owns a private clinic and has an associate doctor and 2 registrars being paid on the payroll. The reason I put associated doctor is mainly because they are self-employed and they get paid a fee, as you know, and 2 registrars. The registrars are possibly on the payroll system, and they get paid salary plus super and work cover remittances. So let's look at how the benefits, the cash flow boost is going to work. So based on the scenario that I've given, Paul's PAYG on the salary is 16,783. Registrar 1 might be on a 25,000 salary and PAYG 6,630, and Registrar 2 might be on a $25,000 salary and their PAYG might be $8,385. Now, that might be because they have a ex-debt, help debt, so to speak. So the PAYG includes the help debt as well. So based on that summary, you will see that the total benefit that Paul's clinic will get is a total 100 grand. And this 100 grand is paid at different intervals. I've just got a small graph below. The first one comes on the 28th of April, or, if you haven't lodged your BAS yet, then as soon as you lodge the BAS, which is 31,798. The second one is in the month of July, as soon as you lodge your June quarter BAS, which is 43,202, and another one in September, which is 25,000. So this illustration is on the basis that your March and June quarter PAYG is going to look the same. So in this example, based on what we've seen, Paul's going to be eligible for the full $100,000. So let's look at it a little differently, where let's suppose Paul was not on the payroll, but he was receiving a distribution or a dividend, but the other 2 registrars was on the payroll. So the PAYG would reduce to $15,015, being Registrar 1 6630 and Registrar 2 8385. Now the benefit is reduced to $60,060, being the first payment $15,015, which is exactly what the March quarter PAYG was, and they'll get another $30,030 on the June quarter, and an additional $15,015 in the September quarter. So what I'd like to highlight is the government's intention here is that they're trying to pay the PAYG for the entire year on your employer's behalf. That's kind of what the logic behind this calculation is. You might be wondering how this was all calculated. I understand it may be a little bit cumbersome to get to the figures, because you got when it goes beyond 100,000, it's limited to 100,000. However, just to simply understand the concept, it's just basically they're trying to pay you for your employee's taxes for the full financial year. John, would you like to add anything before I go on to Jobkeeper?
No, I think that was pretty self-explanatory there. If you do have any questions, though, feel free to send a message now or send an email. Our contact details will be there at the end. More for Prabha, really. Yeah.
Grace, would you like to share something here?
I'm glad that you went through the example with the contractor, because like in our dental clients, of course, there's a number of associate dentists who are really on SFNA agreement, service and facilities agreement.
Yeah, so I do want to highlight, because I get that question asked a lot, and you cannot retrospectively change it, and it is against the integrity rules, and and the ATO have made it very clear. And also, given the fact that they have the government spending a lot of money on this, and there's a good chance that they will probably, once this is all over, and in terms of their audit process can be quite aggressive in terms of probably going after people who are making the wrong claims and so forth. So let's talk about the Jobkeeper payment. So the Jobkeeper payment is not a payment to, not necessarily a payment to the business, but the intention is to keep your employees on the job. So what the government's proposed is that, or has legislated, so to speak, is that you should have employees to start with. Each employee will get $1,500 per fortnight before tax, so you can withhold tax on that. Your turnover should have declined by at least 30%, and we'll talk more about how to calculate that turnover, or there are different options available. You did have a valid ABN as at 12th of March 2020. And your business income included, the subject turnover is based on your business income included in the June 2009 tax return. Now, some of you may not have lodged your 2019 tax return as yet, because it's not due yet until 15th of May next month. When you haven't, then the ATO will look at your BASIS that has been lodged in the last 9 months or so. So every employee must be an eligible employee. So the process is that the employees have to sign what they call a declaration form. So they fill out and they tell us that they are eligible for the payment, just like how they would do with Centrelink. And you can take the information from the face value unless you have any suspicion that the information is incorrect. And basically, based on the information, you can process the Jobkeeper payment. So the requirements are pretty simple. You just have to be a permanent employee or a casual for more than 12 months. Those who are sole traders, they can satisfy just a decline of turnover, and they can lodge to be eligible as well. For sole traders, those who or for companies or trusts that have more than one partner, for example, if you have a dental clinic and there's a two-partner practice and you've never taken any money as salaries and wages, then you still can be eligible for Jobkeeper payment, but only one of you can be, not both of you. And you must be an Australian citizen or a resident, and this Jobkeeper payment is not available for anyone on a temporary visa. So, you must satisfy your turnover as reported in your business activity statements. The GST turnover you report on your business activity statement is based on what you reported in the previous period, and it is comparable to the current period. So, for example, if your June quarter 2019 I will go through the illustration. If the June quarter 19 figure is suppose $500,000, and you compare the same June quarter with the expected turnover for the current for the June 2020, and if it turns out to be less than 30, then the calculation becomes really easy. So what you include in your service income is purely your billing income. So if you're a dental clinic, then just your patient billings, and any income that you normally would have received, such as your sublease payments and so forth. So let's go back to Paul's clinic. Let's say Paul's clinic is expected to have a decline of 30% for the billing for the June quarter, right? So the way the ATO will look at it is they will go back to your June 2019 quarter, and they would have obviously, let's assume Paul reported $500,000. They will check that. They have that data already. And then you report and say, my clinic for the June 2020 quarter is only, at present time, is only expected to report $300,000 to $350,000 worth of income. Then we can justify the reduction in the billing, and then you qualify. If it's suppose it's about 400,000 that you expect, then you won't qualify because it's beyond the 30% mark. So any associates, as I said, who was on a contractual basis and not on the payroll, still can apply for the payment, but only one partner. So if there's two partners, unfortunately, only one of them will get it. The benefit is also available regardless of what has been reported in the June quarter as well. Paul's clinic will also be able to apply for the Jobkeeper payment for all three of them. So remember, we had Paul and the two registrars, so all three of them can apply for it. But one of the compliance requirement is that the Paul clinic need to report the monthly turnover and demonstrate that the reduction in the turnover has been 30% or more. And it's month to month, you need to tell the ATO. You also tell what's happened. So for example, for the month of April, you would have told them what the April month turnover is and what your expected turnover is going to be for the next 2 months. Because realistically, what is potentially going to happen in the next few months is that you will slowly get back to normal, where you might go back and open the clinic, probably part-time, work few hours, or you may not have enough patients to cover the full day. Could be a lot of things, and it could be obviously progressive. So the ATO would like to know the details of what's expected as well. Now, the alternative tests, this alternative test is for businesses that are not the common businesses, which in turn that hasn't been around for 12 months or has not been operating just as an ordinary business, which has regular billings and so forth. So this is essentially is good because the government's given a lot of options to calculate the reduction in turnover. So although it is quite complex and there are a few options to calculate it, but I ask you to just remember what the objective is for the government to pass on this rebate is that if you're genuinely affected by the COVID-19 and your turnover has reduced despite that 30% mark, whatever it is, talk to your accountant or professional advisor, and there might be different ways that they can calculate this for you, which is what the alternative tests have obviously been passed on. So there's about seven different scenarios they've come up with. But look, if your scenario is sort of outside this, it's still worth speaking to your professional advisor, because we still can write to the commissioner and ask for a ruling, just to be clear. So the alternative test is for uncommon businesses, where the business is less than 12 months old. So if you're a new business, businesses acquired or disposed part during the year. So if you sold part of your business during the year. All right. So talking about the alternative tests, the businesses can use monthly average turnover. And just to be mindful, you really need to speak to your advisor, because there are a lot of ways that you can calculate your turnover. So it's, if you apply the logic and you see you're genuinely has been impacted, and one way or the other, they would be able to calculate it. So, and that's one of the reasons what these alternative tests have come into play. And there are so many options that they have given. And so you definitely need to consider each of them, and don't assume on the face value that you're not eligible. If you were qualified for the bushfire deferral, and also it's a requirement that you need to exclude those months from your calculations. So in terms of reporting, you need to report your monthly income to the ATO. Now, typically, it can be done through your software platform. So if you're using something like Myob or Xero, it is a lot easier because it's all interconnected. But if you do keep a manual recording or any in any different form, then it can get a bit tricky, and then it requires some uploads and lodgements, and may take a bit of time. Again, I'd ask you to speak to your advisor to help you with that course. The ATO will also ask for your current reporting turnover and provide the projected turnover for the next following period as well, as I said before. So for example, if the clinic is going to be partially open for the next month and the following month, and then you need to tell them that, okay, we expect a little bit of improvement in where we are right now. So going back to Paul's clinic, because Paul is unable to, Paul's clinic is unable to see patients face to face anymore because patients are too scared to come in. Of course, the telehealth has been rolled out, but in the first month, in the month of April, things might have been really slow because the GPs are getting used to, being able to remotely see patients and the systems and process. But in the month of May, things may have improved. So you need to forecast that and just let the ATO know that it is improving. And it still needs to be below 30% for you to be eligible. So if your expected turnover is going to be more and you're not within that 30% mark, then you will obviously lose the eligibility. That's not to say you're not going to be eligible in the following month. So you still report your monthly income for the month of May, and then you lodge your month of June income. And let's suppose the month of June is again dropped off, and then you will be eligible for that month of June. But May, because your turnover was higher, and potentially you may have lost the opportunity. Just remember, it is self-assessed, and the onus is on the employers to establish the eligibility. The ATO is not going to come and question on you choosing to go into the system. So you prepare the forms and you lodge the numbers, everything. They will accept it from the face value. But there will be going through an audit process, which will be quite aggressive, especially because the amount of money that's been invested by the government. Also be mindful, there are a lot of government agencies, and there's plenty of data matching. It could be the State Revenue Office, the tax office, probably the banks do get information from the banks directly, and also the central government as well, Centrelink, so to speak. Now, in terms of, so that's pretty much it on the Jobkeeper, but I also wanted to highlight that please ask your advisor or consult with them and make sure that they have paid attention to the Centrelink consideration as well for your employees. It's not always the case, but sometimes they may be better off not going through the Jobkeeper, but maybe this job seeker allowance payment, depending on their circumstances. So typically, a single without a partner, the job seeker allowance is $1,115 per fortnight. From the face value, it's still higher than, it's still lower than the job keeper allowance. However, they also need to take into consideration other benefits that they may be entitled to, such as family tax benefits, healthcare, and so forth. And there are some allowances as well. So, so in summary, they may not necessarily be better off with the job keeper, and they could be going through the job seeker as well. So that's important to know. Talking about superannuation release, it's pretty straightforward actually. You can get $10,000 during the 2020 financial year, and another $10,000 for the 2021 financial year. So total, you can draw up to $20,000 out of your super fund tax-free. So the requirements are you are either unemployed or you are already claiming the JobKeeper allowance. So if you're entitled to the JobKeeper allowance, you're automatically you will be qualified. You were made redundant after 1st of January 2020, or your work hours have been reduced by 20 hours if you were self-employed, or you're a sole trader and your income has dropped by 20% or more. Now, this is pretty straightforward. You don't need anyone to do this for you. You just jump onto MyGov account. If you haven't got one, you need to register, and then you can go and put through your application, and it is just like filling another form with Centrelink. Very, very straightforward. So if you think you're eligible for it, just go and register yourself. But there's been a lot of things thrown around on a recontribution strategy, where I have been told that there's been some advice going around advising people to take the money out through the release and then recontribute back to the super fund where you get a tax deduction for it. I would like to warn and ask you to be extremely careful, because whilst it's not illegal to do so, and the ATO have said that it's not in the spirit of the stimulus. So in other words, if you had the money to contribute to super, then you probably are not entitled to draw it down in the first place, so that they will question you on that. So please be wary of those recontribution strategies as well. The next one is the ATO relief. There are some cushioning in terms of your cash flow if you can work with the ATO. They have been extremely flexible. Particularly, they've accepted that they will defer any payment that's outstanding, be it your income tax return or your FBT return or any BAS liabilities, up until September 2020. You can defer them. And also you can vary your PAYG installments for the 2020 financial year to nil. In other words, if you've already paid your installments, it could be under your personal name or through a company. Those installments you can be clawed back for the time being. Now, this is not necessarily a cash handout, but it obviously gives you time, gives you some cash for the time being. But this money will need to be paid back to the ATO at some point. So just be very in terms of managing cash flow before you do that. But again, it's a straightforward process. If you ask your accountant, they will be able to just get it done for you over the phone. And the ATO has always also been very flexible in terms of remitting interest and penalty charges post 23 January 2020. Talk to your accountant or your advisor, and typically they're very good, and they're quite prominent in negotiating these terms. So any interest or penalties you paid so far potentially could be could come back your way. The next one is on bank support. So there are a lot of options available. Not necessarily they are straightforward options, and they need to be tailored to your personal circumstances. So please speak to an advisor or someone who's assisting you with it. It could be directly with the bank or somebody like John. They can help you try and maybe just to help you with the cash flow or even reduction of your overall cost of borrowings. I think it would be best, John, would you like to perhaps touch on this quickly?
Yeah, sure. So I guess with residential loans, so any investment properties that are residential or your own home loan, the banks can pause your loan up to 6 months. There is also the possibility to just ask for a pricing request to try to get your interest rate down as well. So talk to your broker or banker about that. The other thing that some people are doing is moving their interest rate, their repayments from principal and interest to interest only, and just switching that product for the short term, whether or not it's for a year, just to get themselves up and running again. On top of the personal stuff that you can do, there's also the small business relief, which we briefly mentioned last time, which is an up to a 3-year term loan, government backed for 50% of it, where the loan repayments are deferred for, I guess, the first up to 6 months. And then you have the option of paying interest only for the next 6 months and then 2 years to pay it down to zero. But again, keep in mind, while they say it's up to $250,000, you need to make sure that the repayments is your cash flow is able to support it. All of these are subject to bank policies as well. So each lender will have their own, I guess, nuance with regarding that. The other bit as well is you could always ask for fee waivers from your lender. So either talk to your broker or if you have a business banker, talk to them to see what it is that you can do. The other thing that sort of has just been released as well is a bridging finance option for if you are eligible for Jobkeeper and you need to make those payments. Bear in mind you have to make the payments up front and then claim it back from the 1st of May. So the lenders, the big four banks in particular, have got a bridging finance product where they've got their own eligibility criteria there as well, but you're able to get that money up front, keep it for up to, it has to be paid back within 30 days. However, that may give you that instant cash boost as well while you're waiting for those Jobkeeper payments to filter through or to be able to pay back. So talk to your banker about how that all works. So that's really briefly, I guess, the bank support portion. There are other ways that you can structure your loans and things like that, but briefly and generally that's what is available right now from a bank point.
I suppose, John, do you know the interest rate on the Jobkeeper finance?
Yeah, so depending on the lender, some of them will use it. It'll be similar to your overdraft rates. So I know one of the banks, they're basically just either extending your overdraft, or if you don't have one, it's based on, you generally need to have a business bank account with them so they can actually see that and be able to make those payments or to set up the overdraft, but it is still at overdraft rates. So keep that in mind as well. So it could be high, whereas a small business relief loan, it's a fairly cheap rate, 4.95 or 4.5%, depending on the lender as well.
Yeah. And also, John, you would agree that it's a great opportunity for everyone to sort of have a look at their pre-existing, whether it's residential or business, commercial loan, look at the structure, look at the rates, potentially look at, whether they can get any clawback on fees and charges and perhaps obtain an interest rate cut.
It's definitely the best time to be working on this side along with the rest of your business as well. Yeah.
Absolutely.
I have a couple of questions from the community. If you can just work some time into your presentation, please, Carla, for them.
Yeah.
So, question from BM New South Wales. Should I apply for bridging finance from the same bank that holds the rest of my loans?
Generally, it's you should be applying for that bridging finance from the bank where you've got your transactional at, because that bridging finance loan is usually, it's done as a form of an overdraft, and overdrafts are usually tied into a transactional account. So yeah, you should really, not necessarily where the rest of your loans are, but it really should be where your business transactional accounts are.
Well,
That could be different for people. Yeah.
Right. Okay. So I hear that essentially it might be faster to go back to the same bank, perhaps.
It is, because they've got your history, and you're not setting up bank accounts and stuff like that as well anyway. But the eligibility criteria as well, they're fairly new because they only got released yesterday, is about using your it's just an add-on to your transactional account essentially.
Right, and then I've just also seen that they've extended the application deadline, so the Commission has extended it to the 31st of May 2020 as well for the initial JobKeeper period.
Yep.
Question for you, Prabha. From Victoria, what did other companies do for JobKeeper? Did they go for the one in all in, or did they retrench employees?
Depending on the industry, but since the stimulus was passed on, I think pretty much everybody was feeling a lot safer. But there's been a few retrenchment pre any announcement that came through. But I personally believe that the employment has been contained, and everybody's obviously has secured, most people have secured their jobs, and things are progressing well. The only issue is the cash flow for employers, where they have to fund, especially the month of April, and pay the employees, where really there was no income that came in, but still the wages are there, and the requirement was that they had to pay.
Right, okay, so presumably if business picks back up in May, that they can then use that revenue in May to back pay all the way to the 30th of March?
Yeah, so there's always going to be a lag, because the ATO will pay for the month of the salaries that you paid on them during the month of April in May. So they have to come up with the cash beforehand, and which is hence why this bridging finance option is available, but it comes at a cost to the employers. So it's not ideal, but I think unfortunately that's what the employers have to work with at present.
Okay, I've got 3 more questions from the community if you've got time.
Sure.
Excellent. From Queensland, CR asks, once a company qualifies for JobKeeper, do they have to keep qualifying each month? And where can I find out more information about this?
There are fact sheets published by the government, so I would be happy to send you the links. But in summary, no, you don't need to resubmit an application form. However, you need to submit your monthly profit and loss to the ATO and tell them what your current situation is. As I went through before, if you weren't qualified for the month of May, that's fine, but you might be qualifying for the following month, but you just need to submit the reports to tell them that your income has dropped during that period. As long as for that respective period that your income was less than 30%, or based on the calculations that we do, you would still be eligible up to 6 months.
Fantastic. And the scheme ends the 27th of September, is that correct? They haven't increased it in any way?
At this point in time, they haven't. And there's talks about a second wave. We don't know where that's going to go, but let's hope it's not. But for the time being, the stimulus is available up until September.
Okay. I might leave it there unless, because there's another couple of, there's no other slides, but I've got two other questions. So back over to you, Prabha.
Okay, thank you. So I would also wanted to highlight on the state government relief, which probably often get overlooked. The state government funding is typically it's very hard to come by most of the time, and the assessments are often quite stringent as well. But the Victorian government in particular, they've released a $10,000 grant for any business that has been impacted with the turnover of more than 75,000 and have a payroll less than $650,000. So if you have been impacted through the COVID-19 and it is most likely you are eligible for it. But they're not just going to hand out the cash, and they will obviously assess your situation. The way they will assess you is based upon your industry. So if you are if you're a cafeteria or a hairdresser, you most likely automatically qualify. And I would think the dental practices would be in similar scenario as well, not so much GPs. So it's worthwhile applying for it. The application's open on the 1st of June. So if you need any assistance, please speak to your professional advisor, and it would be a straightforward application, as I see. And the SRO has also paid back all the payroll tax the businesses had paid, all payroll up to $3 million. So if you had, if your business had a payroll less than $3 million and you paid payroll tax during the current financial year, all of that would have been refunded to your bank account. Now, if you had not received a payment, you need to contact the SRO as soon as possible. And also the SRO has accepted to defer all the land tax, I believe, until December as well. Finally, I just want to talk about the compliance. Now, it's great that we get all these concessions from the government, but definitely they would want you to keep up to date with the compliance requirements. Please make sure your taxes are lodged, tax returns are lodged, not just the company or the entity that you work on, or your personal ones as well. And make sure the BASs are up to date as well. Now, the ATO is probably happy to have a tax debt in your activity statement, your income tax account or your activity statement account, but they just don't want to see you having outstanding lodgements. So you'd rather lodge the returns and probably try and enter into a form of a negotiation with the tax office. If you're lodging payroll tax, if you have been lodging payroll tax returns, as I said, all your payroll tax returns liability is going to be undone. But if you got any pending returns to be lodged, please lodge now, because if you hadn't, and if it becomes a liability, we don't know what the Revenue Office will do. They may dispute your refund because you hadn't lodged them on time. They haven't told us anything about that as yet, but I would totally recommend that if you've got payroll tax obligations, get onto them and make sure they're all lodged and up to date. Please make sure your accounting records are up to date, especially in light of the Jobkeeper payments. You need to submit reports on a monthly basis to get the cash flowing back to you. And it is important that you have a process set up so that the payments are coming through and you don't have any cash flow hiccup. Please forecast your payments for 6 months carefully and engineer your cash flow proactively as well. And I think it is important that you work with a trusted accountant or an advisor that you use. And of course, we are more than happy to have a quick 15-minute phone call if you would like a second opinion, or if you want to discuss anything about the stimulus as well. Also, be mindful of scammers always around, and at this time of the year, at this time of the period, it's quite common. You might be approached by with all sorts of incentives. So talk to your advisor before engaging anyone in any form of incentives that you're about to receive. So, quick call to action. If you'd like any of us to help you, either from an accounting perspective or from funding perspective, would be more than happy to have a quick phone call, probably for a 15-minute discussion, no obligations. And if it progresses, would be happy to do a Zoom meeting at a set time. And we would also be happy to provide you with a written report of our advice. I guess that's it from me, unless there are any further questions. Over to you, Julie.
No, thank you. Thanks for that, Grace. Do you have any last words?
Yeah, I've got a couple of questions from the community, and then for mostly Prabha, still coming through on Jobkeeper, and then of course we'd love to encourage people in order to contact us for technology or strategy and operations or accounting. I know it says Aspire Partners Technology, but of course your expertise is more in understanding money. Exactly, that's right. The other technology. Okay, so some questions that come through.
Yes.
How are businesses handling the risk of a certain percentages of employees being nominated but not actually qualifying for JobKeeper? So I think that properly speaks to the fact that the ATO may actually make a ruling at some point that says you may have nominated them, but they actually don't qualify for JobKeeper. I think there was a lot of anxiety in the community from the perspective of casuals, because regular and systematic, the examples only came out over the weekend.
So the casuals, not necessarily casual, are disqualified. So if you had casuals who's been working for more than 12 months or has been permanently working, it is definitely, they might qualify. And also remember, if your circumstances are not normal, and like I said, if you're a new startup and you haven't been in business for 12 months, there are other tests that you need to be wary of. And please speak to your advisor and just make sure that you've gone through the checks and balances before sort of assuming that you're not going to be qualified.
That's wonderful. Thank you very much. And finally, super, does it apply to the $1,500 if the employee stood down during that fortnight but still receiving JobKeeper?
The super payments. So this,
yes,
if the employees stood down, they're not going to be eligible for the $1,500 payment anyway. So the employee must be employed during the period that you're claiming for the JobKeeper for that particular employee.
Fascinating, because this is I think this is an interesting area of interpretation, because the one in all in seemed to imply that even if they were stood down and they weren't actually scheduled for work, that they would still need to be paid. So I'm guessing that there's been some additional clarification around this area.
Yeah, the thing is, there's no expectation for the employees to work. It's just they need to be paid during this period. Now, just for the employers to know is that, let's say an employee was paid less than $1,500 per fortnight. The employers have an obligation to still pay them $1,500 because they get the money from the government. For example, if you had a part-time employee, a permanent part-time employee who was only receiving $500 per week, they'd still get the $1,500, but your super obligations is only limited to $500 because that's what you've been paying for. But as a salary, you still have to pay them $1,500 for that fortnight.
Okay, and so you're saying that those employees who essentially stood down, so effectively, say you had a network of 200 employees, but with the effectiveness of COVID restrictions, you only need to use 50 of them. There's 150 people that would otherwise be stood down but still qualify for Jobkeeper. What do you do for those 150?
The ones who have been stood down.
Yes, that's correct. Yeah.
So unfortunately, if they've been stood down, they're not going to qualify. They need to be on the payroll for you to be able to make the claim. There might be provisions where you have re-employed them. Again, something that we need to look into, and it may vary case by case.
Excellent. Okay, sounds like there's something people should talk to their accounting advisors for.
Thank you, Grace.
Thank you very much for your time, Prabha. It's been a really enlightening discussion, and I can't wait to have a future discussion with you with regards to other aspects of accounting, because I'm sure that coming into the end of financial year, there's going to be a lot of confusion as to what can and can't be claimed. So it'll be great in order to interview you closer to June. I hope you guys can tune in for our next discussion, which will be on technology. And if you've missed a previous episode of this, then feel free to head over to MediBusiness, or eventually we'll host it on razu.com.au with a double Z, of course. And if there's any questions that you might have in the interim, feel free in order to email us. You can see our emails up there. And as Prabha has said, he's very happy in order to have a 15-minute free consultation. So I would say take that while you've got the time. Thank you very much for joining us, and I'll talk to you guys later.
Thanks, guys.
Thank you.